Hello, good day, everyone. Welcome to Pew Prime webinar, and this webinar will be starting in about 5 minute time, right? Hello, John. Maybe some of you guys are, not knowing about this. So we have come up with a series of webinar presented by Pure Prime. We categorize it into beginner, intermediate, and advanced levels. So we are now coming to the end of the beginner levels, and today's we're going to talk about technical analysis. Right, so we'll just wait if just to see if there are any more people joining us today. Right, yeah, we will start in about 4 minutes time. Well, if you have any question, okay, you want to ask or interact with the rest of the participants here, you can type it up so we can discuss things together while we wait. But maybe I can start first. Any of you guys here, catch the downtrend of the gold yesterday? Or you guys have been holding the gold since August or September. That would be fantastic. Just to also share with you guys, today we're going to talk about technical analysis, right? So I think despite I see it as like a beginner, okay, it's very easy, but I think it is the core for all the traders out there because I believe by the end of the day, you will still come back to the beginners levels and start to analyze the charts by just using a very pure, very basic manners of tactic. Michael say you say I lost a lot of money yesterday. Do you mind sharing on what asset class you tried yesterday? But to be honest, yesterday I did try a bit BTC and Ethereum. I burned my hand as well. Gold, yeah, gold. Yeah, maybe later I will pull up the chart and then while I will talk about some of the technical analysis, maybe I will use the example of gold and yeah, if we have time, we can uh discuss a bit. Hopefully, this is the experience that you earn. Okay, this is the tuition fees that you pay. Hopefully, it will come back to you double, triple fold. Okay, for Michael. Good morning for Kim and then Ubong. Good morning. Welcome, guys. Yep. So, yep, we'll wait for 1 more minute and before we start. Any questions from you guys? No, 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 no. Why you apologize, Michael? Good morning, everyone. Carlos, you making profit, Carlos? All right. The the pressure come to me now, Carlos. Okay. I will just share you everything that I got, okay? So after you digest, after you can actually try with a demo account, you can try with different strategy, and hopefully one day you can find the one that suit you, okay, suit your philosophy, suit your risk appetite, and you'll be start to make a lot of money. Good morning, good evening, Mohammed. Oh, we have someone from Madagascar. All right. Okay, so yeah, without further ado, so let's start. Okay, yeah, let's start with today's session. So today's we're going to talk about the very basic of technical analysis. But just before we start, I have to read out the risk disclaimer for today's event. This webinar is for informational and educational purposes only. Nothing discussed today should be considered financial advice, investment recommendations, or an offer to trade any financial instrument. Trading CFD and other leverage products carry a high levels of risk and may not be suitable for all investors. Due to the nature of leverage, losses can exceed initial deposit, so it is important to fully understand the risks involved before engaging in trading. While we will discuss market analysis and trading strategies, these are purely for educational purposes and do not guarantee success. By participating in this webinar, you acknowledge that Pure Prime and I are not responsible for any trading decisions you make or any losses incurred as a result. Right, this is the risk disclaimer. So let's start. Right, so these are the things that I'm going to cover today. Everything is very basic, but like I said, if you already have some time trading in the market, I would say 80 to 90% of the people will just come back to the basic, and then maybe you will find that the raw price analysis will be the gems that you're looking for. And because you have a lots of indicators, you have a lots of way of drawing or charting out there, but to me, at the end of the day, it was just noise. They are just noise, and eventually I go back to the raw price uh, analysis. So this is the tactic, or this is the way of doing analysis for me, myself nowadays. So hopefully, by sharing with you all I've got, I hope you can learn something today. And after you digest, you can come up with your trading strategies and start to make profit. Okay, so basic, what does technical analysis? All right, so it is very, very simple. Technical analysis is the study of past data. So past data here, we mean historical price and also the volume that come up with this historical price. Okay, and by using this tool, only this two data, we try to forecast or predict the future price movement. Okay, and I believe everyone, almost everyone in trading CFD or any kind of product, most of the time you will be using technical analysis. Okay, even though you will be investing stock or any other thing like gold or ETF. All right, so you can pull in a lot of fundamentals, okay, a lot of factors, things like that. But when the time you entering, okay, which is the optimal entry price, or which is the the ultimate stop loss levels. These are the things that you have to come up by using technical analysis. Without doing so, how where are you going to enter, and then where are you going to exit? You have to have one TP, you have to have one stop loss. Okay, it not only stop loss is very important, I think TP is very, very important. Why? Okay, you can imagine that you have been investing BTC, let's say, since 2020. Okay, the time like the BTC was just priced at near 10K or 10-ish. And until now, maybe your the figures that is showing on your apps, or your trading apps or things like that, they are just purely numbers. Only when you TP and you pocket it, that is your profit, that is your money. Or else it will be just numbers that is just running on your apps, right? So yeah, and another very, very important assumptions when you're using technical analysis is that market discount everything, and price, you believe it will move in trend, and you believe history repeat itself. Okay, that is a very, very key assumptions for everyone here using technical analysis. And I can tell you that this is not 100% true. Okay, who out there is going to guarantee you that the history will repeat itself? It repeat 2 times, 3 times, 4 times, and this pattern happens again. You know, how dare you going to go out there and say, hey, this time definitely will repeat whatever happens in the past. Okay, no one can guarantee that, only God can do so. Okay, only the prophet can do so. But you know, humans like us, no one can say that 100%. Okay, so how can we, by doing this technical analysis? First of all, we have to know chart, and also we have to learn about time frame. Okay, chart. I think most of the time, how you guys going to depict the price? Most of the time, people are using candlestick patterns, but out there, there's a lots of way to depict a price. Okay, including line, including some of the dotted, things like that. There's a lot of way to plot the chart. Okay, so by using the chart, you can visualize the pattern. All right, so you can know, is this uptrend or this is the downtrends? Okay, hopefully you guys learn, heard about what is higher high, higher low, okay, lower low, lower high. So these are the things that you have to at least know which directions the asset is going to. It's going up, it's going down, or it's already at a peak, or it's already at the bottom. So, and from there, then you can come up with a trading decisions. Okay. And besides that, time frame is also a very, very important factor, for you to judge yourself whether or not you're coming up with a very successful trading strategy, or you just messed up. Okay, because you might be a scalper. Okay, scalper is someone that are very satisfied with just like 100 pips or 50 pips. Okay, open a positions and close it within minutes, or 5 minutes, and they're satisfied with just a very minor volatilities, and then they will close the position, close the trade. But if you are a scalper, but you are looking at a H1 chart, or like H4 chart, would it be efficient for you? Okay, I doubt that. Okay, perhaps it will be more suitable for you to go with 5 minute charts, 10-minute charts, 15-minute charts. Okay, that's more suitable. And oh, maybe someone here, you are a swing trade trader. Okay, you love to eat up most of the profit for the entire trend. Okay, from the bottom to the top, or from the top to the bottom. Okay, but you are looking at 5-minute charts. There will be a lot of noise. You can imagine if you're trading on gold, if you are trading on BTC, okay, you're looking at 5-minute charts, and from the morning to the evening, and you can imagine like how volatile how the candlestick pattern is going to look like. And then from there you try to trade, you plan to hold these positions for a week long, or like few days, or even month. Would it be possible? So time frame is the key. You have to know, you have to ask yourself, what is the extent of the risk appetites that you are comfortable with, and what kind of trading strategies that suit you the most, and then you can come up with what time frame suitable for you. Because I can guarantee you, by looking at the 5-minute charts and by looking at a H4 chart, they will be telling a very, very different story. Okay, by looking at 5-minute charts, maybe you can think, oh, this is uptrend. Okay, definitely it's going up. But maybe when you turn it to H4 chart, you will see the chart, the price is flowing at the bottom, and it's about to break new low. Okay, things can be like that. So time frame is exceptionally important. You have to understand it very carefully. Okay, and then candlestick. I believe you guys here, most of the people here, 90% or 100% are using candlestick, because this is the most famous way to depict a price for almost all the asset classes. And it because every single candlestick tells 4 very, very important things. Okay, and just now we talk about TA, we talk about historical price, and also volume. By adding these two things together, what we try to find out is what are the people in the market think at this moment. Okay, you have to bear this in your mind. It is very important. So by looking at every single candlestick, what we're trying to understand is at this time frame, okay, at this period of time, what are most of the people think, and then we predict the next candlestick and the following candlestick, so that if we are accurate enough, we will be starting to make money, right? So every single candlestick consists of the opening price, consists of the closing price, highest price, and lowest price. Okay, so by looking at every candlestick, you have to ask yourself these questions. Why, when the opening price is at here, but why at the end, the last closing price, it at here? Okay, and then you can have to also ask yourself why the highest price is at here, but the closing price is not close to the highest price, but go all the way down, or why the closing price is very close to the highest price. Okay, this kind of question, and vice versa with the lowest price. Okay, by asking this kind of question, you can understand what is the meaning behind every candlestick and what is the human behavior, the trading behavior behind every candlestick. Okay, this is the meaning. Okay, of course, you might be argue that some of the candlestick patterns consist of two candlesticks, okay, including the engulfing, and then some of the candlestick patterns come with three candlesticks, like the evening star, like the morning star. All right, so this also are the thing that you have to understand what is the logic behind, because actually behind every candlestick they are human made. Okay, so we are not a institutional players that can pivot the candlestick. Okay, by forming the candlestick, but what we try to do here is to follow the big boat. When we are on board on the big boat, hopefully we can go have a very nice journey, and then we can make profit. Okay, so very importantly, ask yourself why the opening price is here, but the closing price is at the other side, and also why the closing price is not stick to the highest price, but stick to the low price, and vice versa, things like that, and what is the changing of the behavior behind every candlestick. Okay, it is very, very important. Right, and then here come also a very, very important things that one must learn when we talk about technical analysis, which is the support and resistance levels. Okay, why it is so important? Remember just now I talked about the importance of the stop loss and also the TP. Okay, so how can we come up with a stop loss and TP? We have to refer to the support and resistance. Right, so often, okay, for example, you're opening a long position. Of course, the support line will be your stop loss level, okay, and then the resistance line will be your TP level. All right, why the stop loss will be your why the support line will be your stop loss level is that if the price, how can we come up with a support levels or a zone? Okay, is that many time when this asset class reach this particular line, this particular zone, it will lead to a rebound. Okay, the asset will not go beyond or go below this price level. So we draw a line there, it touches there multiple times, and then it's not dropping. So here will be the strong support line for this asset class. But what if it dropped below? It means that this support line is no longer legit. When it break below, it will be like a free fall for this asset class. So we have to set a stop loss at underneath the support line or the support zone. Okay, unless you want to talk about the false breakout, then it's another thing, it's another story, and these are the things that we will learn in the upcoming sessions, where intermediate or advanced. Okay, we talk about false breakout. Okay, but by basic, okay, by textbook, and then again, next one, resistance. Every time when this price levels, okay, and when this asset hits this particular price levels, it will, register and will not go further up. It can't go beyond that. Okay, for example, like last time, when the gold was just traded at below 3,000, it will just always touch 3,000 and go down, touch 3,000 and go down like 2 times, 3 times. So, the traders out there will not understand that, oh, the resistance is at 3K. Okay, gold is very rarely, okay, it's very hard for the gold to go beyond, to spike above 3K mark. Okay, it's very impossible. So when the gold reach nearly 3K, it is the time for us to set a TP level, TP price order. Okay, take profit, and then we close the positions, we take our profit, and go to the bank. Okay, this will be the money, this will be the profits that we make. All right, so it will be more like a psychological barrier. Again, it's a human made. Behind every behavior, behind every support and resistance line will be, the humans make happens. All right. So when most of the people, the majority of the people believe that this line will be the support line, that this will definitely be the support line, because everyone going to do the same thing to try to catch a rebound at the support line, or stop loss at the support line. Same goes to the resistance. If everyone, 80% of the people believe this was the resistance line, everyone's going to TP there. And of course, when everyone is selling, how can the price go further up? It can't. It will just have a U-turn and come back down, and then have a pullback. Okay, so that will be a very effective resistance if most of the people think so. Okay, but of course, when there's a break above from the resistance line or a drop below from the support line, there will be a structural break, and then the trend changes. So this will also be something that we have to learn how to deal when the support line or the resistance line is no longer legit. Okay, that is another things that we have to learn in the upcoming sessions, but we stick to this first. And I have to stress this is in almost every sharing sessions with me, the importance of doing a risk management. Okay, so what is doing risk management is you have to set a stop loss and you have to set a stop loss and a TP every time when you open a positions. Every time, it is a key. And this is speaking up from my experience. I used to tune, okay, I used to change my stop loss and resistance. Okay, this is very, very not disciplined. And of course, it does cost me a lot. So every time when you want to place an order, okay, when you want to start an order, you have to come up with a very thorough analysis, okay, including fundamental. You have to understand what's happening out there. And after that, you go back to the TA, when you learn about the trend, when you learn about chart, and then you have to think twice or triple time, where is the stop loss and where is the TP. And once you set it all, close two eyes, okay, when you lose, you admit lose, and then you do your homework, and then you go to check back what mistake that you make. And of course, when you TP, you don't chase because you don't be greedy. Okay, but what we want is like a long-term winning trades. Okay, but we don't stick with just one position. Okay, that is not going to happen. Even people great like Warren Buffett, they cannot win like 100%. Okay, maybe what make them great is that they can eat up 80%, 90% of the trend. Okay, but no one really can tell you they can make 100% from the entire trend from the bottom to the top. Okay, that is almost impossible. All right, so I have to stress this again. Have to do your risk management very, very well, and then draw your support and resistance line. Okay. Right, next. Basic chart patterns, all right? So, chart pattern, basically, I, differentiate it into two. One is the continuations and one is reversal, okay? By, reading this word, you can already tell when that is showing, okay, this chart pattern showing a continuations means we can enter, or we can average out, and we can tell that the trends will continue to the previous or the established trend, okay, or the direction. Reversals means that here come to the end of the trend and things going to go to the opposite directions. Okay, as easy as that. Okay, and of course there are some of the typical conventional chart patterns out there, which I think it is also very effective and very useful, or else it would be no longer exists in the market. Okay, no one going to talk about that if it's not useful. Okay, and the continuation, yeah, chart would be suggesting that the trend has a higher chance to extend the rally. Okay, but yeah, vice versa, reversals give you a signals, okay, to at least place a TP or stop loss, okay, because we believe the trend going to reverse. Okay, so let's dive into some of the very typical or classic chart patterns for the continuation. So I come up with this triangle price patterns. Okay, so we have this ascending triangle, and we have descending triangle, and then we have this asymmetric triangle. Okay, so if you know about higher high, so this is something we call the higher. We don't have the higher high, but for the ascending triangle, we have a higher low. Okay, the lower and then a higher low, and then even a higher low and higher low. So we are expecting that at one point the price will break up from this triangle patterns, and the trend will continue. So if you spotted something like this, it will be telling you that it is an uptrend. Okay, and then on the in contrast, this will be no lower low, no lower low, but it gradually forming this lower high, lower high, lower high. Okay, it's no longer buying, no one is buying up the price. Okay, most of the time people keep on believing that the price is discounting, 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 and once this support line is broken, okay, it means this is a very bearish trend. Okay, it's going down. Okay, this is the descending triangle. And a more complicated one will be the asymmetric. Okay, of course, the example here show a upward breaking, but it could be a downward breaking either. So which directions it break, it tells you which directions it's going to go in the upcoming sessions. Okay, so this is a very typical of a continuations price patterns. Okay, I can share with you a chart. Okay, so maybe I will go with this one. Hold on. It's a bit laggy with my computer, so yeah. I don't know why it suddenly become like this. I have to go to 2014 because I find it is a very, very typical chart that I think everyone can understand. All right. Yeah, so this is the line that I find, and then this resembles of the asymmetric triangles that I share. So if you zoom in, you can see all this wick, like the lower wick, the lower tail. Okay, if I draw accordingly, that is like a higher low. Okay, hopefully you guys can see this higher low, higher low, higher low. And at the same time, we have a lower high, lower high, lower high, lower high, lower high. All right. So like I said, remember just now the example is upward breaking, but this example is actually downward breaking. So yeah, it does continue. The trend goes like this. So anytime when you spotted this kind of patterns, okay, you can be ready. Okay, it could be breaking either side of the directions, but if that is let's say it's a flat one, okay, for example this, okay, it's not going to be 100% like a triangle patterns, okay? That is not going to be possible because, like I said, behind every price pattern, behind every candlestick, there are human made, okay? Because humans not like going to be like a robot, going to be like 100% precise, okay? You can see there is no higher high, okay? There's flat, but at the same time, we have a higher low, all right? And then it break above. So it's a continuation of a trend. All right. So these are the examples that I can share with you in the future if you spotted patterns like this. Okay. So you can you will have this knee-jerk reactions. You know what actions you're going to take. All right. Let's go back to our slide. So this is the continuation with the triangle price patterns. And then next one is the cup and handle price patterns. Of course, this is even harder to spot, okay, because like I said, it's not going to be like the textbook is very nice, it's very neat to for you to follow. Okay, so this kind of continuations pattern is that is resemble a cup, okay, and then you have two pullback. One is a bigger pullback and one is a minor pullback, okay. Yeah, but I said the one is deeper, one is smaller, and then after that, once it's break up from the handle. So this is the cup, this is the handle. Once it's break up, it tells us a continuation of the uptrend. Okay, so this is the very typical cup and handle price patterns. Okay, so again, I can share with you some of the chart that I find. I have to go back to 2017. Right, November. Okay, so this is not like 100%. Okay, this is not like 100% of a cup and handle, but yeah, I try to find some that resemble this, and then I just want to share this kind of patterns with you guys. Okay, so yeah, this resemble the cup. Okay, this resemble the cup. Okay, a deeper pullback. All right, and then the second cup. I mean this handle. Okay, so this is a little bit this kind of patterns. Okay, and this is of course not like the like 100% nice example. Okay, so remember this, and then I show you another example that is a better one. Okay, so this is the better one. Okay, hopefully you guys can also see this kind of pattern, and then let's go to uh, okay, so this is the better example, okay, that I share with you. And that first of all, we have a cup, okay. Hopefully you guys can imagine that this is the cup, and then this is the handle. Okay, so this is more like the textbook. Okay, so this is more like the textbook, a cup and a handle, and then breakable from the handle. So when you see this kind of patterns, you can already anticipate some things that is going to happen here. Once there's something happen, okay, you can place a stop limits price order. So you can actually eat up the profit like. So you can imagine this will be your stop loss. Okay, the pullback. Okay, the lowest levels of the pullback will be your stop loss, and then you can refer to the previous high as your TP. Okay, this will be a very simple but a very useful trading strategies for you. All right, yeah, and then let's go back to slide. Okay, and when we talk about continuation, here come the reversal. Reversals this time round is happens more often, and then you can be easier to spot this kind of patterns, and then you can trade accordingly. All right, so this resemble two shoulder. Okay, this is like a humans, and then it has two shoulder, and then this is the head, and I can assure you this is not often going to happen like textbook. Okay, you cannot find like 100% like the left shoulder and right shoulder they are aligned, and then there's a head. Sometimes there's tilt to a side. Okay, sometimes it's not going to like face like this 100% right in the middle of the chart. Okay, sometimes they tilt a bit to the left, to the right. Okay, it's not 100% in the center, not 100% in the middle. And of course, you have to refer to the neckline. Okay, why? Because this is where we enter. Okay, because this is the breakout. Okay, this is the breakout. Okay, when there is a head and shoulder, it means a downtrend. Okay, a bearish signal. But if there is an inverse head and shoulder, it means a bullish. Okay, bullish breakout, a trend reversal, bullish trend reversal. Okay, so you don't mess up with this. Okay, I also share with you one chart. about this. Okay, maybe you can go with. Okay. So, like I said, it is not like almost every time 100% like what happens with, the drawing of the textbook. Okay. Sometimes it will be something like this. Okay. Like, like something like this. Like I said, it's not going to be like 100% in the middle. Sometimes there will be like tilt to the left and tilt to the right. But what is more important is that you have to find where is the neckline. Okay, the neckline have to be very important because this is where you enter. Okay, for example, like this, you can also place a long position here when once it's break up, and where is your stop loss will be the previous low, and this time round is almost touch the stop loss, and then the TP we can refer to the previous high. Okay, the previous high somewhere at the far back, and then you can come up with the TP. Okay, and also you can also refer to some of the candlestick patterns that I'm not going to discuss deeper or in detail this time round. But what I want to share with you is that this is maybe something that can resemble an inverse head and shoulder price patterns, and this maybe will be the trading strategies that's coming out from you by using this kind of pattern. Okay, this is the real-time example. Okay, right. Then the second one is the bottom, and then this like a double bottom and also the double top. Okay, remember just now I promised Michael's that I'm going to talk about the gold. Okay, so you can see gold, the latest trend. Okay, the latest chart resemble a very nice, a very typical double top price pattern. Okay, a double bottom it means that here is a very strong support line for this asset, and we are expecting once it's break above from the previous high, here will be a structural break, here will be the bullish breakout for this asset. And then in contrast, here will be a very strong resistance line for this asset. It cannot go beyond here. And once this asset price drop below the previous low, it will be a bearish breakout. Okay, this is a bearish signal. Okay, and if you remember what happened with the gold few days ago, I mean, yeah, just 2 days ago, is this a very nice, very typical double top to you? Okay, I hope that it is. And then this level will be the previous low. And once it's break below from the previous low, it is breaking down. Okay, so by when the price come up to these levels, okay, this back here, okay, maybe you're not going to know that is a trend reversals, right? So you maybe will just continue. But when this kind of thing happens, okay, I think I just end this first. Okay, when if something's already happens and come back down, here you have to have like a alert in your brain. Okay, alert in your mind. You're gonna tell yourself once there is a break below from the previous low, then it will be a very typical double top, and I want to take actions. I want to jump in and open a short position here. All right, here will be something really trade by textbook. Okay, you have to remember this. Never mind you lose one or twice for Michael, but you have to remember your experience. You have to remember the tuition fees that you pay. Hopefully, you can come back stronger in the future. Okay, you have to remember this kind of price pattern. All right. Okay, let's continue. And then, yeah, moving averages. Moving averages is also very important, and it's very easy for you guys to follow. So what is moving averages is that it suits off the price patterns. Okay, remember we talk about candlestick, but candlestick is sometimes very hard. There's a lot of noise. But moving averages depends on the period you use. For example, if you use a 14 days, 14 time frame moving averages, it divide the price by 14, and then by textbook, some people just use 20 as a shorter time frame, moving averages, and then use 100 as a long-term time frame for the moving averages. And how you use it is by, you can remember this, the golden cross and the death cross. Okay, what is the golden cross? Is when a short-term line cross above the long-term line. Okay, the logic behind, the rationale behind is that the price is going up. Remember, because the short-term time frame, when you divide it, it go higher than the long-term line. Okay, means the increment of the price is accelerating. Okay, vice versa, a death cross is when the short-term line cross below the long-term line. Means that what? The price of this asset is discounting faster than the long-term line. Remember, because the line, they are averaged up, they divide it by how many days you use. For example, here, 50 days is divided by 50 time frame, and then the 200 days is divided by 200 time frame. Okay, so I think this is like a supporting push for you. So, you go back to the price pattern, you go back to your candlestick patterns, okay, and then like you want to double confirm your view of the upcoming trade, you can always use the MA line strategies. And of course, you're not going to definitely stick with the 50 days and 200 days. You can try and error, do your back testing. If you are comfortable with 20 days as a short-term line and then 50 days with the long-term line, you can go ahead with that, just as long as it match your trading strategy, your philosophy, and you are comfortable with that kind of risk that you're going to take, then you can go with that. Okay, but this is a must that is not going to change regardless of what time frame that you're going to use. Golden cross is the golden cross, a death cross is a death cross. Okay, when the shorter time frame go ahead of faster than the long-term time frame, it means that the price is appreciating, okay, it's accelerating. Okay, so this means that a bullish trend is ahead. Okay, and then the death cross is when the shorter time frame go lower, okay, weaker than the longer time frame. It means that the price is discounting, okay, faster than the long term, meaning it's a downtrend. Okay, it's a definite thing. Right, so here come to all the contents that I'm going to share with you. You can go back and digest with it, and then you can test it out. And of course, you don't need to test it with the real account, with the live account, but you can always test your trading strategies with a demo account. And again, it's a must to do a risk management. Okay, set your stop loss, set your TP. All right, here come to the end of today's session. Thank you guys. And yeah, I will open up for the Q&A. If you have a questions, you can type it out. Yeah, so right, so Ashwin actually asked, in the continuation patterns, what time frame would you want apply? All right, so I'll share with you my thought is that often when I trade, I will look at H1, but before I look at H1, I will always look at H4 because I want to make sure that the positions that I hold is going well aligned with the direction. Okay, once this is clear, I will want to clear up some of the noise. Then I will go with H1s when I actually placing the trade, when I placing my order. Okay, so this is from my perspective. All right, so I hope I answer question from Ashwin. Yeah, Michael, the recording will be available, so you can ask from your account manager, or you can ask from the CS for the recording. Carlos asks, is there any way to follow your teaching? Yeah, of course, you can always check your EDM because this will be a continuation series. Like I said earlier, it will categorize as the beginner, intermediate, and advanced. We have this whole series. Hopefully, see you in the next one. All right, thank you for your for all your supports. Okay, it means a lot to us. And hopefully you guys are enjoying and have a very good experience trading with PewPrem. Okay. In us, I'm in Edmonton. No. I'm actually don't know which cities that you are mentioning. All right, thank you, everyone. So hopefully can see you guys in the next one. All right. So thank you for all your support. Bye bye.